While most were paying attention to Bitcoin, Ethereum, XRP, and other major coins, some of the world's largest financial institutions like JP Morgan, BNY Mellon, SBI, Digital Assets Holding, and the DTCC were quietly building a network of networks. It's called the Canton Network, and it's already processing trillions of dollars in volume. So we're breaking down what it is, why it's a massive investment play for 2026 and beyond, and how it's fundamentally different from XRP and Stellar's XLM. Do you have a busy lifestyle, but maybe you're thinking about getting into some day trading, but you're nervous about the uncertainty, the risk, or where to start? Of course. This is why you need a trusted AI trading bot with support from a great team. It's the only way to get started on your trading journey. A trading bot will allow you to start trading without taking up all your time with minimal risk. That's the main thing. It's a great way to accumulate more of your favorite digital asset as well, like XRP, XLM, XDC, Bitcoin, whatever it might be. Right now you can get up to 40% off by using my affiliate link down in the description. Happy trading. So what is Canton? The Canton Network is the network of networks. The problem is that banks can't use public chains like Ethereum because they can't broadcast their private client data to every node in the world. And there's a lot of reasons why companies want to keep their transactions private. One of the reasons is NDAs. They don't want other businesses or anybody to spy on their transactions, what their business is doing, for competitive reasons. There's a lot of different reasons. So Canton Network isn't just a single monolithic chain. It's a layer 1 protocol that allows different subnetworks, like one for a specific bank, for example, to talk to each other. Now, let's have an analogy to have a better understanding. If the XRP ledger is a public town square where everyone can see what's going on, think of Canton as a series of private tunnels or lanes where only the senders and receivers can see what's going on. But they all use the same GPS system to avoid crashing. Now, comparing Canton versus the XRP ledger or Stellar or other major blockchains, XRP, for example, is focused on cross-border liquidity, replacing the SWIFT system. Stellar is focused on banking the unbanked, remittances and individual-to-individual retail payments. The Canton Network is focused on capital markets, so we're talking about U.S. Treasuries, repurchase agreements or repos, and complex derivatives, the heavy lifting of the global economy. The XRP ledger or Stellar network have public transactions where everybody can see it. Banks have to use side chains or private ledgers to get privacy, which often breaks their connection to the main network, which can cause security risk. Canton, on the other hand, uses a privacy default. It is a public network where data stays private at the sub-transaction level. The native asset on the network is Cantoncoin. The ticker is CC. Now, it functions as a burn and mint model. So Canton uses a burn and mint equilibrium. This is designed to keep the network stable for banks that need predictable cost. So there's the burn factor. All transaction fees on the network are denominated in USD to keep the cost predictable for businesses. However, those fees are paid by burning CC tokens. So if a trade costs $1, $1 worth of CC is permanently removed from circulation. Now, a bullish case for Canton is the burn rate. Compared to other blockchain networks, it's significant, which would reflect the price over time. Although they do mint new coins every 10 minutes, the theory is that the equilibrium effect would be outpaced by the deflationary effect. The Canton network was founded by Digital Asset Holdings, a blockchain firm led by co-founders Yuval Ruz and Eric Serenicki. Now, it was launched in 2023 with a consortium of financial institutions to create a privacy-enabled, interoperable, and decentralized ledger for institutional finance. There's 30 major institutions that are involved with Canton. The Canton Foundation is backed by a coalition of founding members spanning market infrastructure, tokenization, data, custody, and venture from global FMI providers to specialist crypto firms. So together they're helping steward the global synchronizer and build synchronized institutional grade capital markets on Canton. Now, a massive part to the Canton ecosystem is the Canton Foundation, or formerly known as the Global Synchronizer Foundation. It's a non-profit organization that serves as the brain, or referee rather, to the Canton network. Now, originally launched with support from the Linux Foundation, the Canton Foundation is an independent US-based entity. Now, its mission is to manage the global synchronizer, or the Canton network, the core piece of technology that allows different banks to be able to communicate with each other without seeing each other's private data. Now, who is behind it? As you can see, major names like Chainlink Labs, the DTCC, BNY Mellon, Goldman Sachs, and so on. Now, if you're someone that's worried that the Canton coin is just another bank coin controlled by one CEO or a company, it's centralized basically, well, look at the Canton Foundation as a whole, governed by the same people and businesses that run the Linux Foundation and the world's biggest clearinghouses. So this ensures that the network stays neutral and decentralized. Now, the core of Canton Network's technology is its language called DAML. Unlike other chains where everyone can see everything, Canton uses sub-transaction privacy. Justin Peterson, the Chief Technology Officer at TradeWeb, explains here how early DLTs fell short of institutional requirements and why Canton's built-in privacy made it the only viable option for real trading workflows.
A little bit about Canton. We had done some POCs probably 3-4 years ago with a small DLT platform. And we actually did treasury trading and treasury repo. And the first thing we discovered, at least I was sitting there thinking, it's like, there was no privacy. It was, the data was being distributed throughout the network. There was going to be no way we could hide orders, transactions, whatever it been. And look, I've been around long enough at TradeWeb to know when you speak with clients, especially when they feel like somebody's front running them, they start asking a lot of questions. And there would be no way that we could really defend the use of a DLT that didn't have privacy built in. And so that's when we started working with DA, because maybe there are others, but I'm not aware of them. DA is the only one who's built a network where privacy is built in from the beginning. And so that's how we end up choosing Canton as really our choice. I mean, we can work with other networks, but really our focus is on developing capabilities using the Canton network.
Now, privacy is the obvious difference between Canton network and many public chains, but governance design matters just as much. So in this clip, we're going to hear from the CEO on how he explains why institutions like the DTCC are sitting on systematically critical trillions of dollars in assets that need governance structures that can meet regulatory obligations.
These are features or differences about the Canton architecture that somebody would make note of that's meaningfully different from a public permissionless blockchain like Ethereum. Like what are the things that are worth highlighting? That oh, this is very different than some of the philosophy from Ethereum. What should we talk about first? I'm sure there's at least a handful of them.
Yeah, I would say that the easy one is privacy. To be honest, I would say that privacy is probably the easy one. I will mention a point that is not necessarily a technical design, but actually a governance design feature that is, I think, just as critical. I think that, we want to envision a world where there's no regulation and everybody just get along together. And then, the rubber hits the road. We see Aave protocol fights, we see swap. And the reality is that governance is just as critical. So if you are the DTCC or you are any one of these large financial institutions, whether we like it or not, honestly, this is not about my personal opinion, but the reality is that the DTCC, given the fact that they do actually sit on $100 trillion worth of assets, are extremely systemically critical to the US economy. And as a result of that, they are highly regulated. And as a result of that, it makes their life very complicated. Right? Running the DTCC is not a trivial task. We can say that they can do a lot of things better, and they probably could, and I don't think that they would even disagree with that. That being said, they do actually have quite a serious responsibility on their shoulders. And I think that as we launch the network, and this is again, looking back and saying, I think earlier, David, I was saying to you, like, hey, patience might have been the right decision or not. But one of the things that we looked at throughout the years is governance of these networks.
Now, the network has been quietly working with the likes of DTCC for quite some time, but as of late January, the Canton network has transitioned from a quiet institutional experiment to a major player in a real-world asset tokenization space, especially with the JP Morgan integration. So JP Morgan's blockchain unit, Connexus, has natively integrated the JPM coin into the Canton network. So why is this bullish? So this allows for atomic settlement. A bank can buy a tokenized bond on Canton and pay for it instantly with the JPM coin on the same ledger. This solves the last mile problem of institutional finance, making Canton the most practical network of networks in existence. The DTCC and Digital Asset Holdings have partnered to tokenize DTC custodied U.S. Treasury securities on the Canton network. With this partnership, the DTCC plans for the first time to enable a subset of U.S. Treasury securities custodied at the DTC to be minted on the Canton network. The organizations are working towards an MVP in a controlled production environment. The DTCC will equal a liquidity explosion for the Canton network. So why is this bullish? It's because it's not just a pilot, it's actually a move to unlock trillions of dollars in collateral. Every time these treasuries are moved, traded, or used as collateral for a loan, CC is burned. This creates a massive non-speculative demand floor. Now, the bullish case is, picture this, the DTCC and JP Morgan alone driving up transaction volume. The amount of CC being burned could eventually outpace the amount being minted for validators. If the network hits this deflationary tipping point in 2026 this year, we could see a reduced supply combined with growing institutional demand that could lead to a parabolic price move. Now, the bearish sentiment is that they're still lagging within mass adoption. Banks adopting this technology, it's still very slow, and regulatory uncertainty. We're still in the beginning stages. Now, the current price of the coin right now is sitting at just under 15 cents. Now, I personally think that with all this great news, and we're going to see a lot of utility coming out, I think that it has a great potential to hit into the single digits between now and the end of the decade. Double digits, I guess we'll have to see as far as, the regulatory landscape and all that goes. But put your thoughts and opinions about the project down in the description. Are you bearish or bullish? Do you like it? Do you dislike it? Or are you thinking about holding some?